Hello and welcome to This Week in Bitcoin. This week was a little bit more of a slower week. However, there are some exciting news. News number one are out of Europe, Norway to be specific. And no, it's not about the potential mining ban or anything to do with mining, but rather an announcement by yet another company that they are following a Bitcoin strategy. The deep sea mining company Green Mineral announced that they want to pursue a $1.2 billion Bitcoin strategy and buy as much Bitcoin as possible to put on the balance sheet and therefore increase the Bitcoin per share metric. CEO Stale Rodal, hoping I'm not butchering his name, sees a lot of potential in Bitcoin, its decentralization, disinflationary state, and the potential to use it as an alternative to fiat money. The company will now not pivot to a Bitcoin strategy company or a Bitcoin treasury company, but rather will use portions of its operations money to put in Bitcoin, as well as they're going to raise that amount of capital to also put Bitcoin on the balance sheet. This is big news because with it, it's the first major company in Europe to actually follow pursuit and do the Bitcoin treasury playbook. And $1.2 billion is not a small amount. So the question begs, have they just jumped on board from all of the success in the US with other companies? Or is this maybe the kickstart to European Bitcoin treasury strategies? We'll wait and see, but for now, it's an exciting announcement. News number two are for the spot Bitcoin ETFs in the US, and that's a study by Glassnode and the Avenir Group, where they've taken a look at position sizes and security in ETF positions. And what they found is that most of these positions are actually unhedged, meaning they're not secured to the downside. And a lot of the institutional interest in the ETFs is actually taking a long position. With this analysis, they also conclude that Bitcoin is turning into a macro asset and very much in correlation with the S&P 500, NASDAQ, and Magnificent 7 companies. This is a key milestone because Bitcoin now gets into the realm of actually being correlated to these indexes and these assets. And it turns it more into a tech-like stock, tech-like commodity for institutional investors. This means, according to the study, that in the future, you will also see a correlation in bear markets. So potentially, you could see a drop of 30 to 45%, not the 60% plus we've seen in the past. And considering that Bitcoin is mostly recovering quite quickly from geopolitical events, there are countless studies such as the one by BlackRock and Bitwise who take a closer look at 30 to 60 days after an event. For a lot of institutional investors, then, that volatility is appealing and makes it a good investment, at least according to the study, to go long in. That continuous interest by institutional investors in Bitcoin is showing that we are in the midst of a different area in Bitcoin and for sure an exciting time. And last but definitely not least, we also have some internal news and we need your help with the Swiss Startup Award. For countless years now in the categories of fintech, we've been actually getting to the second place. And now we have the opportunity to claim the top spot. However, as I said, we need a little bit of push from your end because so far we're actually in second place again. If you want to help us out, I will leave the link below. All you need for it is a LinkedIn account. You'll need to click on it, vote for us, verify everything with your LinkedIn account. And if a lot of you do that, we can actually get to that top spot, finally. So if you want to help us out, check out the link in the description below. And with that, we're at the end of this week in Bitcoin. You know the drill. If you got questions, feedback, or just want to say hello, leave me a comment below. And I look forward to seeing you next week again.